Hey everyone, welcome. Thanks for staying for the final panel of the day. And yes, it's the final panel of the day, but I think it's the most exciting panel of the day. We get to talk to bankers. Woo!
Yay!
Nice.
No, but let's get started. So I'm Samantha. As the host introduced me, I'm the founder and CEO of Yap Global. We are a PR agency that has been telling the story of crypto for the last 5 years. We've been keeping up with the narrative. And speaking of the narrative, we work with a range of digital asset players, really niche tech, Web3, DeFi protocols. And there's this general sentiment that bankers don't really know what's going on with crypto. But so I'd like to just let each panelist share a bit about their role and what they do, and actually add on, what do bankers know about crypto? So, Amy, how about we start with you?
First of all, welcome. Thank you for coming. For those of you who don't know DBS is Southeast Asia's largest bank, and we are Asia's safest bank for the last 14 years, but we are also known to be a very innovative bank. So we've started our crypto journey in 2020 when we launched our digital exchange to give safe access to our private banking and institutional customers to crypto. And then we also have a lot of innovation initiatives, which we do in collaboration with the industry here in Singapore. And last, we bank digital asset companies in the corporate bank. And that's what I do within DBS.
Cool.
Hey guys, I'm Rene Michau. I'm the Global Head of Digital Assets for Standard Chartered. We're also an old bank, 160 years, and we've been in Singapore, I think longer than DBS actually. From my perspective, I look across everything that we do. We've got a ventures business that launches ventures. Two of those have made announcements at this conference, Zodia Markets and Zodia Custody, pure play crypto focus, exchange, and one's a custodian. We're doing work across our institutional bank on central bank digital currencies, various other projects, and then also crypto as well. We mentioned earlier in the year that we're including Bitcoin and ETH custody into our security services business in Dubai. We're working closely with the DIFC on that. Our market focus, we're in 60 markets. We're mostly in Asia, Africa, and the Middle East, headquartered in the UK. But yeah, are we supposed to know about crypto?
Sounds like you've got, a lot.
You have the next half an hour to find out, Rene.
Yeah. Gerald.
Great. Thanks so much. Hi, everyone. My name is Gerald. I'm a co-founder and CEO of Singapore for Sygnum. Sygnum is the new kid on the block, next to these old dinosaurs over here. But we are purpose-built, for crypto, for digital assets. We are a fully regulated, digital asset-focused financial institution. We have a full Swiss banking license, and in Singapore we operate with 4 regulated activities under a capital market services license, and we have an in-principle approval for payment services license, which is well underway. In addition to operating out of our 2 hubs, Switzerland, Singapore, we've also, in the last 12 months, extended our global footprint to include Luxembourg as well as the UAE. Now, having licenses is great and I think increasingly necessary to be a player in the space, but we're more excited about what our licenses allow us to do, and that's to serve our clients globally, which comprise institutional investors, corporates, high net worth individuals, as well as other financial institutions, to empower them to own, manage, and build their digital asset exposures, including cryptocurrency exposures, with complete trust and peace of mind. We're still, getting started. We're 6 years old, but we already work with more than 1,600 clients globally, and we help them to administer north of $3.5 billion in assets. So that's a little bit about us.
Yeah. Sounds like they do a lot with crypto, but I think there's this challenge with crypto adoption of whether you purely hold your own Bitcoin or Ethereum, and engage with the decentralized finance world, but also do it with, like as Gerald mentioned, with safely holding your assets. So to the floor, what challenges do you think banks and centralized entities like yours face when trying to adopt crypto and offer crypto offerings to your customers?
I mean, I'm happy to pick that up to start with. I think when we're looking at how we offer, I think there's two parts. One is banking the ecosystem and actually providing very traditional banking services, bank accounts, payments, and FX to cryptocurrency firms that require those services. And I think that has been a challenge in terms of regulatory certainty, the level of KYC and CDD that's required. So that's one challenge. I think stepping back, the other challenge in terms of bringing crypto product to market or digital asset product to market, I think that's a much broader spectrum. So on one end, if you have a look at pure play crypto, so public chain, Bitcoin, ETH, potentially further than that, where the way that we work today is that we run a set of ledgers within the bank. And we use messaging systems like Swift and other clearing networks in order to help each other update each other's ledgers so that everything matches. But we've fundamentally got the admin username and password to the databases that sit within our organisation. Obviously, we've got lots of controls around that to make sure people don't do the wrong thing. But when we're talking about offering product based on particularly public chain, these are networks where we don't have the admin password, right? We can't change that. What we have to do is we have to focus on securely managing public-private key pairs, whether it's for our own money or for the money of our clients, in order to bring that to market. And so that's a much more complex set of challenges to work through and a very different paradigm. And then you add to that the regulatory burden around that, or the regulatory uncertainty, the evolving regulations. That's again, more of that. So there's some of the challenges that I think we face. And even if it's other forms of digital assets, central bank digital currency, tokenized assets, private permission networks, all of these have more challenges around maturity. Right? Are we there yet? Is it big enough? Is there an active market with which we can interact? So yeah, I think that there's lots of challenges, but with challenge comes opportunity. So hopefully that's helpful.
I would like to add to that. When you look at, we've done a lot of projects around using blockchain to transform the way that we operate some of the parts of the business. So if I give an example on the on digital assets, the security tokens space. When you look at the security token space, it doesn't just require the technology to be ready and scalable and ready for large size transactions, but it also requires you to have the liquidity in the system. It requires you to be able to get a secondary market up and running. So these type of real world issues need to be solved for. You cannot only look at the technology, you need to look at it in conjunction. When you look at other areas such as using DeFi for doing, we did an FX spot exchange with SBI under Project Guardian. What you saw there was that this works in this very experimental way, but this is not necessarily how the financial markets operate as a larger whole. So you need to then think about how do you build solutions that can actually mimic the larger financial space, not just a small block of that.
Yeah.
And I was just going to say that you introduced us as centralized financial institutions, and last week I was on a panel with a bunch of our DeFi friends, and there seems to be a presumption that centralization bad, decentralization good, but we don't really see the world in that way, and that's I think a very much a false dichotomy. As a financial institution, as a bank in Switzerland, our business broadly breaks down into what we classify as wealth management services. So providing our clients with the ability to invest, buy and sell and hold both tokens directly as well as exposures to digital assets via fund products that we manage, such as wealth management. Our corporate commercial banking services, or more like transaction banking, payments, fiat on and off-ramp services, and then finally our still nascent advisory business around capital raising, using both traditional securities as well as blockchain-based assets like NFTs and utility tokens and the such. And what we're seeing is that across the board, there are of course clients, in particular high net worth individuals or investors managing their own personal wealth that can take the decision and have the option now to use decentralized rails to interact with smart contracts to obtain financial services in a more decentralized fashion. But by the same token, there's a whole other spectrum of clients, corporate clients, fund managers, who have an obligation to use regulated financial market infrastructure like banks, like custodians, and other financial market intermediaries, because I think a lot of the lessons that the industry has learned over the last 18 months is that there's a role for regulation, and there's a role for trusted counterparts like the three institutions on the stage. So.
Yep. Yeah. No, I like how you touched on that, Gerald, that centralization isn't all that bad, and even Evie, you touched on it as well. It's just, you got to bring this level of like maturity to engaging with your clients, your customers that are large institutions and high net worth individuals. Yeah, I mean, a lot of the wealth in our world today is held by corporations, and if the crypto industry wants adoption to happen, there needs to be regulated entities that people trust. So that means that everyone on this panel, like, you're representing the banks that are well on their way. But with that being said, it'd be good to hear specifically, what products and offerings each of you have. Is there any kind of in the pipeline, in the works that you can tease if you're not ready to announce it? But yeah, it'd be good to hear what DBS has in the pipeline as well as Standard Chartered. And
maybe I start by building on the point that you just made. When you look at what happened over the last year, especially what happened in November, you can really see that understanding of counterparty risk become a lot stronger. And when we looked at what the effect that we saw in the bank, our AUC of our custody grew by 150%, while the prices of Bitcoin and ETH did not grow by 150% quarter to quarter, year on year. So we've seen that growth, and that growth came from institutions as well as private banking customers and accredited investors seeing that need to go to a trusted player and actually going to a centralized party, but a party that they can trust, that is properly regulated, set up, has the right governance in place. So we definitely see that shift happen. So like I said, we have our exchange where you can buy Bitcoin, ETH, and a number of other coins as well as STOs, and then we custodize as well those assets within the bank. And I know that you guys are going to do it now, but we were one of the only banks, or the only bank that was doing that within the bank itself, holding the assets. So of the exchange within the bank, cold storage. And then we continue to work on the initiatives here in the industry, and we also do our own initiatives. We launched an ECNY wallet in China. We did a bill of lading using NFTs to authenticate the bill of lading initiative for trade finance. We've done a number of initiatives beyond just the industry initiatives to further develop use cases within our industry and using blockchain as a technology. And then, like I said, we've been banking responsible players within this space, and we do go through the very rigorous risk management standards for us to offer corporate services, but that's also helping innovation here in this space. We did a bit of research, about 1,000 Web3 companies here in Singapore, close to 500 in Hong Kong. So when you look at this space, there are quite a lot of companies, and they do need access to bank accounts, they do need access to the cash rails, and that's something that we help as well with as a bank.
Yeah, I guess I think I agree with everything Evie's been talking about, and what's important, you mentioned that we're going to do some stuff too. I think from a banking perspective, it's crucial that it's not just one institution doing a thing. if you look at the crypto ecosystem, the Web3 ecosystem, where it works best is where firms are working together and building infrastructure that works across multiple institutions and supports the whole community and lifts everyone, right? So I think that's a super important point. From a product perspective, so our house view is that we believe that digital assets are a permanent part of financial services and they're important to how we continue to innovate. Where we have been focused is in our non-bank subsidiaries, so Zodia Markets and Zodia Custody, where we can offer services that have gone through a bank level of due diligence, which I'm sure for my friends, the CEOs of those companies, has been quite traumatic. But what that means is you've got these robust institutions, you've got a segregation between trading and custody, and they're part of a broader banking ecosystem within the Standard Chartered business, but they're also working across several other financial institutions as well. So from a product perspective, that's where our focus has been. What that does do, though, is it supports a view that there is commercial opportunity in crypto markets today. There's a demand for the ecosystem participants to get access to banking services and for traditional institutions to get access to products that can allow them to access the asset class. So to that end, as I said, like within the institutional business in particular, we've got work happening on the crypto space. We are constantly thinking about, well, what does the world look like tomorrow when you have a much broader base adoption of crypto assets, much broader base adoption of tokenized assets on large-scale chains, arguably public chains, but potentially very large-scale permission chains as well. And so that's very much a focus of where the different business lines are building within Standard Chartered. We do have quite a lot of work on the CBDC side, and that's less driven by immediate commercial opportunity and more by the strategic requirement to try and make sure that CBDCs are functional and helpful. But yeah, I think honestly it's a really interesting time to be a bank and to get to do a lot of introspection around what works and what doesn't.
Great. Well, Sygnum's bread and butter right now, although we do a full suite of regulated financial services and asset management, and have a full suite of asset management products centered on digital asset strategies. But our bread and butter right now is really the provision of more basic banking services to crypto natives, to Web3 firms, foundations, as well as institutional and accredited investors who are building exposures in the space, as I mentioned. Samantha, you asked us to be provocative, so I'm going to lob one at my fellow panelists. We wouldn't be doing as well as we have been if our conventional and more traditional banks were doing the necessary jobs of banking these players in the first place. So I'm glad that we have that first mover advantage. I'm glad that myself, my co-founders, and our team, being so enmeshed and embedded in the crypto and digital asset ecosystem, being really firm and early believers of the transformative potential of this technology means that every single feature, every single product and service that we offer at Sygnum has been purpose-built for the innovators, the builders, right, in the space, and purpose-built also to help onboard the next 10 million investors and mainstream institutions into digital assets. While, as I mentioned, these more classical financial services are really generating the core of our revenues today, we still, of course, continue to push the envelope in terms of future finance. We are particularly proud of, I think, a few initiatives that we have pioneered in the last couple of years. The first was really around empowering and enabling other regulated financial institutions to also be able to onboard their existing clients into crypto. We call it our B2B offering, or bank-to-bank in Switzerland. We are the leading B2B provider in Switzerland today. We have 16 Swiss banks that have onboarded with us and are at various stages of integration. Most recently, we announced a collaboration with PostFinance. It's the Postal Savings Bank of Switzerland. I don't know now, after Credit Suisse, whether they're the second or third largest retail financial institution, they have 2.7 million Swiss clients. And from next year, these clients of Post Finance will be able to buy, sell, and hold crypto assets with Sygnum in the back as a white label full suite service provider. So we're very proud of being able to help this next wave of crypto adoptees to get access via their existing banking relationships. And then on the tokenization side, I know we're going to touch on that a little bit later on in this conversation. We have also been, I think, a forerunner in this space. We have tokenized everything from a Picasso to a CryptoPunk and everything in between. And we're very much looking to bring this offering to Asia as well, with a focus really on the structuring and advisory piece. I'm not going to give too much away, but we have a few initiatives right now with large traditional issuers. So these are your Fortune 500 companies who have been watching fascinating developments on the crypto front from the sidelines, but are now ready to be able to engage with the Web3 community by also raising capital in the form of NFTs or utility tokens. And what they need are regulated financial advisors like ourselves to be able to help them navigate the space.
Thanks for that, Gerald. Lots of teasers in there. Rene, did you want to respond to any of that?
Well, I mean, he's right.
Thank you.
I mean, because I guess, Gerald, Sygnum has the opportunity to be a bit more agile, I guess, to the larger institutions. I mean, are there challenges with, say, working with Standard Chartered to innovate and cater, I guess, to the Web3 crypto native clients?
So maybe I'll pick that up in this way, right? So what's interesting is let's talk the Web3 community. There's so much being built on very large-scale networks with functional business models, economic models that work. And so when we talk about Web3, it's a really big space. And then you start to add in online virtual spaces or metaverse, if you want to call it that. It becomes a very big space. But if you look at again, I'll come back to those foundational things. Like if you look at the thing that gives you access to that, it's your wallet address, right? Fundamentally. I would include, Roblox and Fortnite in the general metaverse stuff. And yes, you don't need a wallet to access that, but maybe one day you will. So I think that we need to be really thoughtful as financial institutions around just where we are. The ability to offer foundational, we get excited about the ability to offer foundational services, bank accounts, payments and FX to ecosystem players, and I think that's super important. But the gap to then being able to take our existing customer base into a Web3 world with identity, wallet addresses and things like that is, I think that's getting a bit over-enthusiastic for where we are, and we've got a lot of work to do. So, the challenge, I think, for all of us on stage, although some of us are much more focused on that issue than those of us with a really diverse business, is to really focus on what are the next steps we need to take to remain relevant in a world that's changing this fast. And I think that there's a lot of discussion around, banks aren't banking crypto firms, and and yes, lack of access is a really important problem, but I think that there's responsibility on on all sides for that in terms of uplifting risk, uplifting capability, uplifting knowledge, uplifting talent, and depending on which side of the fence you sit on, you might have built a great product as a crypto native, but getting the right level of compliance and risk infrastructure into your space, which we saw late last year is not always prioritised, is equally as important as building digital asset and crypto experience in a 160-year-old institution. So I think that the way that I would think about this, and what I like about what Gerald was saying is, these guys have seen the opportunity and pushed really fast and far ahead to get into that. I kind of think that the expectation from our clients and from the industry should be, and I think it is, for the rest of the traditional financial institutions to develop the capability to critically think about how to serve this space and how to as I said before, introspection. Like, what do we need to change? What's working and what's not working?
Yeah. We actually, I agree. And what I see in
Damn
what
it.
yeah, sorry.
So
I'm
we're gonna
sorry.
have an
I'm
argument.
supposed to not agree with you. But I do. And what we see a lot is that we provide, and this is, what we see these days is that companies are actually open to listen, open to get advice on how to adopt some of these practices, how to put in place the right governance, how we partner with them to improve on certain fronts, where we do have expertise, age-old expertise on how to handle these matters. And I see there is a lot of openness, and for those who are willing and open, we partner with them to look at how do you improve your own standards, and can we help you to do that. And I also very much like working together, because it gives you a view on how your product, when you're a builder, how your product will work within a large, scalable way. Because there is a difference between small retail adoption and institutional adoption of a product, and how you need to think about scaling it for institutional adoption. So that as well, again, both sides, I would say, work with banks or work with financial institutions or corporates to see how can you make your product ready for that institutional adoption, and really break out of the smaller views. And in the same way, how do you manage your company in a way that allows for scale and that has the right standards in place to do so? So that's something that we really work on with companies to help them then thrive within the space.
No, great responses. You're all banks, but your clients are different, and you're all coming at it with different strategies.
Yeah.
Which is,
And if there are
see.
other banks, like Rene and me were good, but please join us. I mean, I would
Great,
say
yeah,
it's
we're all
get
we're
in
all
there.
going after the same goal, trying to get more institutions and companies to adopt crypto. So
Well, the
tackle
more
it different
more
directions.
knowledge there is, the more you are in the space and understand the space, the more we can work together and enable things. So I think in general, more players in
great.
in it will be better.
And speaking about understanding the space, you're all based in Singapore. TOKEN2049 has attracted 10,000 attendees, I heard, and a lot of them come from around the world. I think due to, you've heard it across the different panels today, but due to the maybe harsh regulatory climate in the US and potentially in Europe, Asia has been quite attractive to companies. I think that a lot of you here and a lot of projects I've seen are here to learn more about the region. So what insights can you share about the appetite for crypto adoption in Asia, the Asia Pacific region, which is also a very complex region? So yeah, Gerald, you want to start first?
Sure, happy to do that. So we serve a very geographically diversified mix of clients. As I mentioned, we have north of 1,600 institutional investors, corporates, and high net worths on our platform globally. And about 20% of our client base comes from the Asia Pacific region, I'd say. So I think that provides a little bit of insight into the similarities and differences between like the Europe and Asia clients. I think in general, on the, call it the investment side of things, the speculation side of things, I think that activity in Asia, as with the rest of the world, is pretty subdued. It's a function of the macroeconomic environment that we're operating in, and sort of a risk-off sentiment that persists. So in that way, and for that segment of the market, I think the pain being felt in the US and Europe is also similarly felt out here. But we're very encouraged by the level of development in terms of software engineers and other tech talent that are still being drawn into the space, that are still committing code and developing the next wave of innovation in the Web3 space. So a lot of Web3 companies are still being founded out here and still require basic banking services to be provided to them. And then on the other side, I think the fund management industry and funds that are incorporated in Asia, Singapore under the VCC regime or structure, they also have there we've also seen some sort of green shoots emerging. These fund managers have been able to raise more AUM and are starting to tentatively to make some deployments again into equity in Web3 startups, but also in some cases taking direct token exposure. And those folks, again, not telling my fellow panelists what they really don't know, those folks also require solid banking rails to be able to do what they do in a completely compliant fashion, which everyone is seeking to be able to do in this environment. So in general, I think there's still a lot of activity happening in Asia. Maybe we don't see it reflected yet on the price action, but it's coming, and we're confident and we continue to be committed to our Asian client base and to helping them succeed in spite of the more wintry conditions we're facing.
I think it's really. I actually think it's not super simple. It's very hard to work out. I feel very empathetic towards firms that are trying to work out where to be in the world to build the business that they want to build. Regulation and the way that it works is helpful for some business models in some markets and really unhelpful for other business models in other markets. And so from a talent perspective, it's a huge challenge for everyone. I think Asia, if you include Hong Kong, Singapore, and the Southeast Asian region, if you go slightly broader, include the Middle East and Dubai, this is kind of where most of the time there are the most alignments that can allow people to kind of get as solid as they can to build a business. And that's true whether you're running a fund and wanting to allocate to crypto. It's true if you're trying to build a Web3 business. And it's true if you're trying to build product or service clients in a bank, right? It's that the more certain you can be about how certain products are going to work and the economic benefit of that and the longevity of that, the easier it is to go, right, this is the place where we're going to be. Now, I think that if we look at the markets that I've mentioned, there is much more certainty and specificity in the environment in those markets, which is why we're seeing, the engagement here in this conference, but in general, the talent migration into those markets.
Yeah, and I would also add, look, where we are here in Singapore, and now it's also starting across the region, but we had a very proactive regulator who looked at this space and who started to invest time and energy in learning about this space early on. So we've seen that here in Singapore. So I have to think that Singapore is one of the largest financial centers in the world. So you can expect that from that, a lot of the activity is going to start. And then thirdly, the country itself and the region is very innovation forward. So a lot of innovation will happen here naturally, and it's being supported, again, by a regulator who is supportive, and then by a system which can enable that further. So that is something that you can see, and I just mentioned 1,000 over companies here, 500 over in Hong Kong. That is a testament to the fact that that has worked over time. And don't underestimate the amount of time it can take you to actually learn how to operate in this space. You don't go in and know it all in day one. You've got to...
Really?
No, it's harder than you might think. So you gotta build up that knowledge base. So starting early is positive for that, and that's what I think we're bearing fruits of now.
No, that's great. I know we're running out of time, but just quick 30-second parting thoughts. What message do you want to say to either other banks and other projects that are not in Singapore at the moment? Yeah. Quick.
Learn. Go out there and learn. Go talk to people and get yourself into the community. It's a great space.
Yeah.
So I think risk management, and I mean that in terms of building that, embedding that into the product for your project, for your business, for the way the business works, that is the key to unlocking financial access, licensing, all of that stuff. And whilst it's painful in the short term, in the long term, the economic benefit is large.
For the Web3 companies out there, I would just encourage you guys to keep building and the knowledge that on the financial services side, between these two banks here and Sygnum, we're going to figure something out for you guys. And then
eventually,
if you are a financial institution listening to this, then I would just continue to give that call to action. Get involved, right? Get involved. Get informed and get involved, because there's lots happening in this space, and you can't miss out.
That's some great reassuring parting thoughts. So banks actually do know a lot about crypto. So yeah, please give the panel a round of applause. Thank you so much, Gerald, Rene, and Amy. Thank you guys, and thanks for staying on for the final panel of the day. Enjoy your evening.